welcome back to the Don and Gino Real Estate and Finance Show right here on your hometown station, AM 1220 KHTS.
And remember, our goal is always to guide you to personal and financial wellness. Hello and welcome to the Don and Gino Real Estate and Finance Show this fine Saturday. I hope you are hiding from the sun. It is absolutely scorching this weekend, or at least using a pool. That would be nice. This Saturday I got Scott Crayon in the house joining me in lieu of Don Getling. He's taking a little break today, so I have Scotty here with me.
Hello everyone, how are you? Nice to be here.
Yeah, you're hiding from the heat with me a little bit. At least we're in this tiny air-conditioned room, and that room's called the Vault Media Studio. We invite you to check out the Vault Media Studio by going to donandgino.com. And you can join us in the Vault, and you'll see who our guest is. We've actually been trying to get this guest on for, I don't know. We've been talking about it for at least 2 years, maybe 3. Mm-hmm. And it's Molly Ellis with CALHFA, and we'll get into a little bit of what that is. It's an opportunity for you to buy a home with no money down. Now, this is not 2007, it's not 2006, but yes, I did say no money down, and it's not a replay.
Exactly. Right. I think a lot of people will get the notion that, oh my gosh, are the lenders opening back up the floodgates for, your negative amortization loans, your zero down type of loans that, carry a first and second, and they sound scary and they're adjustable. And
yeah, well, there's actually a little bit to that. We'll talk a little bit about that because we are loosening up guidelines, right? Fannie Mae has loosened up their guidelines recently. Student loans are kind of a big thing that the industry is looking at and looking to make changes and seeing how they handle student loans as far as qualifying and things of that nature. But as a general trend, I would say things are getting looser. If I had to make a projection, I would say they're going to continue to get looser. But it doesn't mean it's going to get crazy. And, I have my theories of what happened in the past, and it really had to do more with fraud than it did product. Ultimately, there was tremendous amount of fraud in our industry, and that's been pretty much banished and wiped out.
Right.
So I think we've got a really good future ahead of us for the real estate. And with no further ado, let's have Molly come on.
Well, I thank you. Thank you so much for having me, guys. I do appreciate being here today. Happy to talk with your listeners about the CALHFA program and our down payment assistance and closing cost assistance. And just to kind of piggyback off of what Scotty said, it is kind of scary that we're here. But I also want to assure you that we have protections in place to make sure we are responsible lending, that we are setting up people for success in these home loan programs that
now,
we have.
How long has CALHFA been doing basically these grants and assistance programs and things of the state nature?
CALHFA has been around actually since 1975.
Okay.
So we've been here a long time. Our first down payment assistance program, I was actually with the agency, so I'm dating myself a tiny bit. But our first down payment assistance program was in 1998.
Okay. And what that tells me is that you've made it through the down cycle.
Yes.
Right?
Through many of them, actually.
Yeah.
Yes.
And the foreclosures weren't so rampant that your product got
Right.
shut down. So
Right.
there must be good protections in place. It must be a safe product.
There, it is. It really is. It's responsible lending, for sure.
So the reason I have Scott joining me today is that Scott actually did a couple of these already, and we've gotten through a couple of these. This is a product that if you ask your average loan officer, they will be scared, and they will say it's a horrible product because they don't know how to do it.
Because they don't understand it.
Yeah.
That is so true. That is so true. That there is some fear in just not knowing about the product. But
Right.
we're definitely here to help.
Yeah, I'll raise my hand on that. I've been in the mortgage industry as a loan officer since 2002. Had a big bank background, and what I was trying to really get at earlier is that most of those big banks back in that era were privately financing 100% of the loan of the purchase price of that home, and it wasn't responsible lending the way we qualified borrowers from a debt to income standpoint, how much you make compared to how much the housing payment's going to be, and there were a lot of other loopholes tied to that. We've all heard the expression, if you could breathe, you can get a loan.
Right.
That was true.
Yeah, that sort of thing. And of course it went the other direction. Now we have to draw blood and things of that nature.
Right.
But
Totally.
I think we found a nice little pocket and a happy medium. And what CALHFA does is that they've set limitations to a lot of the guidelines that couple with the agencies, which is going to be FHA, Fannie Mae.
Right.
So,
From a debt-to-income ratio perspective, you're super conservative.
Yes. Very conservative at the 45 back-end debt ratio, for sure.
Right. And just to complete my thought, I think in the first half of my career, which was up until that real estate meltdown, it was brainless. You know, it wasn't difficult to try to get people qualified for those types of loans, obviously. And then, you know, after a lot of the reform, I think a lot of loan officers took the lazy approach, and they were saying no to a lot of clients that were trying to buy their first home because they didn't understand these products and they were fearful. So, you know, I'll throw myself into that group for a long time. And since I've been at Skyline Home Loans, which is about 3-4 years now, we've really tried to take a more aggressive approach to help more homeowners by utilizing these types of programs.
And we're so glad you do.
Well, that's the thing. That's what I want to get at today. Yes, it's safe, responsible lending. It can be no money down. It's still a regular loan. So what we start with is we start with either a conventional loan or an FHA loan, the standard cookie cutter loan, and then we add these piggyback products to it, which are your products, which would be the ZIP product.
Right.
And the reason you say that, which is this, I love this, right? So where are you going to borrow 4% of money and have to pay it back at 0% interest? That's why it's called ZIP.
Exactly.
Right.
Zip.
So if you could borrow money, this is just good finance, right? If you can borrow money for free, you should always borrow
Do
it.
Right.
Yeah.
Exactly. I like to say it's better than borrowing money from family because mom will look at you cross-eyed when you go on vacation. Yeah.
That's so true, isn't it? Yeah.
So yeah, our ZIP product is designed to help pay for the closing costs for the borrower, and it is paid back at no interest rate, and it's actually deferred. So that just means that you don't have to make a payment. Your borrower doesn't have to make a payment, a monthly payment. So it doesn't negatively affect the way they qualify for the mortgage. It only helps their cash into the transaction.
That's actually a great
cool.
point, too, is that this product is not necessarily only to reduce your money down. Let's just say you did save the 5% down that you need, but you just don't have enough for closing costs.
Right.
Then we can piggyback this product on it, and you get a 5% down loan, gets you a really nice loan, right? Good, favorable mortgage insurance and other terms. And ultimately, you can utilize this product to pay for your closing costs.
Yep.
Yeah, so that's another great benefit. Now, here's one. Now, I'm going to raise my hand and say I don't really understand the My Home too much, right? So the ZIP is something I'm totally comfortable with. The My Home is a little bit different. I get the concept of it, but let's go over that one because I think a lot of people are going to try to put that one, slide it under the rug.
Right. No, I love the fact that we want to talk a little bit of My Home because that's actually the frosting on our cake because that's going to pay for the borrower's minimum down payment. So where My Home could actually be used for down payment or for closing costs because ZIP has to be closing costs, My Home defaults to the down payment.
Nice.
So really, you can have a borrower that has their minimum down payment paid for.
Right. So let's talk about an FHA loan because I think this is where it
3.5%
couples perfectly, right?
Yep.
Right. So FHA loan requires 3.5% down. And so you're going to take your My Home, and they're going to cover that 3.5% down with that.
Correct.
Okay, beautiful. And then now I'm going to get my ZIP program, and that's up to 4% of the purchase price.
4%.
And typical closing costs, Scotty, what, 2 to 3% right now?
I would say so. Yep.
Okay.
2% of your purchase price is kind of rule of thumb, but
Right.
Remember, on the
purchase price.
CalHFA loan, it's a tiny bit higher, though.
Right.
Because there is a charge for that's not built into the rate, so
Yep.
there is a separate charge. So if you estimate 3-ish, then it will cover the bulk of those closing costs.
Right. So you've got these two. Now, they're loans. Let's clarify
please,
that.
thank
These
you.
are not
Yes.
grants. You don't get money
Correct.
for free. We do have grant programs as well. We could talk a little bit about that on another show. Those are different programs with different qualifications. But this is a way to get into a home today. And I know that people are fearful of, I should save, I should have skin in the game. That's not why people defaulted in the past. It really isn't.
No.
If you understand this industry, that's not why people defaulted. Look, VA loans have been done with zero money down forever.
Right.
And they still perform. Why? Because VA never stopped underwriting income.
Right.
So underwriting income is the crux of that. So we're actually going to cut away to a break real quick, and then when we come back, we're going to go over again. That's right. No money down. Buy a house this weekend. Get out there. Actually, next weekend. Give Scott at least 1 week to get it together. When we come back to the Don and Gino Real Estate and Finance Show.